Hi everyone and welcome to today's morning report on Thursday the 31st of March with me, Rich Perry, market analyst at Antec Markets. It's the final day of the quarter today, and there's a little bit of caution through the European markets today, a little bit of a retracement of recent gains. FTSE 100, DAX and CAC all sort of between 0.7 and 0.8% lower at the moment, and it seems to be a bit of positioning, certainly ahead of the payrolls report as well. So there's two reasons to be cautious there today. So that's why markets are a little bit retraced. You've seen a little bit of dollar strengthening, not too much in the last certainly overnight and moving into today. As sort of some of this recent decline unwinds, and that recent decline come on the back of those sort of big dovish comments from Janet Yellen. So it's slight unwinding, but if you look at the Treasury yields, still pretty negative, aren't they? And still corrective, and still I think sort of reflective of what is going to be a sort of a weakening dollar in the coming weeks. You might get you're going to get volatility tomorrow, that's for sure, on the payrolls report, but still I think you're going to get generally weaker dollar. Now the concern I have at the moment is in the currency markets. Why is Janet Yellen and the Fed still dovish? It's because their concerns over global growth, and that doesn't really paint a strong picture for commodities, does it? And what we've seen in the last sort of week and a half is that the oil price continued to slide lower. It's actually continuing to move down again lower today, over 1% lower, arguably completing a little head and shoulders top pattern. I think it's possibly en route to sort of retracing back towards sort of 36 area, but it certainly seems as though that strong rally of sort of February into early March has sort of just petered out recently, and I think that's interesting that this is coming just as the point at which the Fed is looking cautious on global economy generally. So we've got this weaker dollar, generally speaking, and I think that's playing out through the forex markets. We've got just a slight unwinding of that move, but again, as I said, sort of in the morning report, I think that ultimately is likely to be a bit of a selling opportunity on the dollar. Any sort of gains that you see, and I'll talk through those on my FX charts as I go through my morning report chart analysis. Economic data for today is we start off with UK GDP at 9:30, expected to come in line. This is the GDP for last quarter. Final reading for last quarter is 0.4. Final reading for this quarter is expected to be in line with the second reading at 0.5%, and that would be 1.9% on the year on year. So slightly down from Q3 at 1.9%. The main focus, I think, of the European morning will be the Eurozone inflation at 10 o'clock. That will be at sort of coming in forecast to be 0.1% negative, but we had a slight uptick in the German HICP data yesterday, surprise to the upside. So that sort of possibly means that we could see a nice surprise to the upside in the eurozone inflation. That could give the euro a bit of a boost as well. Already we're seeing the euro just slightly unwinding some of that dollar strength early on today. Now this is the core data, expected to just jump slightly to 0.9%, so remaining fairly solid on the core data, but obviously we're still nowhere near that 2%, which is the ECB's target. And also we've got the weekly jobless claims for the States, expected to be flat at 265,000. So that takes me on to my chart of the day, which is the dollar Swissy. Now, as I said, across forex majors we've seen dollar weakness, and dollar Swissy is no different. We've seen the breakdown of that 0.965 support, which took dollar yesterday, or dollar Swissy yesterday, to a new 1, 2, 3, 4, 5, 6 month low. And interesting that we only just got a closing break by 2 pips, 9648 there. But I think, generally speaking, I think this sort of chart just reflects the fact that any rallies are going to be seen as a chance to sell. Further weakness is likely to be seen. That 94.75 support seems to be sort of the next level off the block. Now, if you go out longer term, you can see this uptrend, old uptrend broken, and basically formed the basis of resistance as well. So I think rallies are a chance to sell. I think we're going to see a creeping weaker dollar in the coming weeks. I think that's going to play out through dollar Swissy as well. So these momentum indicators pretty much across the board all showing uh, rallies are a chance to sell. Further weakness, I think, is going to be seen. Pressure on that sort of 30 level. MACD lines negatively configured, as are the stochastics. Let's look at the intraday hourly chart. Again, negative configuration across the board. Rallies are a chance to sell. Look at the. Just get that. You've got the all these negative sort of moves on these momentum indicators still in place. Stochastics have just rolled over again, given a sell signal. So that suggests that resistance, the initial resistance around 96.80, which was yesterday's high, coming in again today. 96.67 was the overnight high, and resistance coming in there. So rallies are a chance to sell on this chart, and it'd be interesting to see if that does get any sort of rally, because I think there is overhead resistance in place here. You've got this. Put the crosshairs there on the overhead resistance there. So, but you've also got a pivot at 97.20 that you probably wouldn't want to see. Well, certainly the sellers wouldn't want to see a rally through there. So I think any sort of upside between sort of 96.80, 97.20 would be an ideal selling opportunity. But even then, I think already you've just had the stochastics crossing over, so it's putting pressure back on the downside. And I think we're going to get a retest of yesterday's low, 95.90. And ultimately further downside, as I said, towards that 94.75 key support, the October low. So I wish you good luck in your trading today on dollar Swissy, and I will speak to you later.